All right. So, Brian, why did I have trouble? Why did I stumble over your name after all this time?
Do we need to
Well,
restart?
there's this whole thing, Brian. Nobody knows how to
Yeah.
pronounce your last name
Okay. Okay.
because including, of course, Grok has
Okay.
no idea. If I pronounce it perfectly, it's never, it's always going to be Wong if I pronounce it perfectly. So,
Mhm.
this is the problem, Brian. I don't know what you
Mhm.
could do about
Yeah.
it. So,
Yeah.
all right. I want to talk about the economy. Well, no, in fact, no, let's talk about the economy in a minute. Let's start with what happened Friday. That's what's on
Mhm.
everybody's mind.
Mhm.
We've got Bitcoin, which is really the only thing we can look at over the weekend. I mean, we can look at the China stocks, and get some idea, but basically, I kind of gotten in the habit of looking at Bitcoin over the weekend to get some kind of idea where things are going. Well, Bitcoin is down another 5% today, back to
Mhm.
111. So overall, about 10, 11, 12% off of its all-time high,
Mhm.
and 10% down since Thursday.
Mhm.
So that would tell me or suggest to me that we're probably looking at another 2.5% on the S&P on Monday. What do you think?
Um, yeah, it seems like it was a pretty big shock and a chance for people who want to sell and pull back and to reposition, maybe.
That seems to be not everybody, of course, but I
Mhm.
listened to an awful lot of different people over, Friday night and Saturday, and almost everybody was saying exactly what you and I think on this situation. The market was a little stretched and it was looking for an excuse, and voila, there was an excuse.
Right.
And then everybody else, the next words out of their mouth is, "This will be good."
Hmm.
That
Right.
we need a little bit of a down day or two in order to
Mhm.
establish a new floor, and then we'll go up from there.
Yeah, and then the question is the China-US thing a quick flash in the pan? Because it doesn't actually, I think, kick in. Like neither side is actually starting anything until like they're talking about November 1st.
Right,
So it's negotiation positioning that may not actually happen.
right, right. Yeah, it's plenty of time to solve it. And Trump says he's going to go over to China even if she doesn't meet with him,
Okay.
which I'm sure she is going to meet with him. So, okay, so it sounds to me like we're, pretty close on our understanding there. Now, if the S&P takes a 5% dump, usually that could be at least 10 and maybe 15 for Tesla. So are
Mhm.
you imagining a possibility with the 367?
Might hold a 390.
You think 390 is more likely?
Right. But if it goes down to 367, like you say, it wouldn't be too shocking, especially considering, the overall market taking a big hit.
Right. Yeah. I don't think it's anything to do with the fundamentals. Right
Mhm.
now, I can't, there's hardly a week that I can think of where the fundamentals were any better than
Mhm.
last week. I don't know, five or six different companies, banks and analysts raised the stock price like a lot.
Target, yes. Price
The
target,
target,
yes.
yeah, a lot. I mean, like
Mhm.
40%, 30%. So that plus I think the fundamentals were fine. You think, I mean, overall, after watching for a week, how do you feel about the reports on FSD 14.1?
Yeah, it's still looking really, really good. I think, and we're gonna get 14.2 in a few weeks, so it's looking really solid. I'm really looking forward to getting it on my own car.
Right.
Want to try out that drive-through.
Yes, indeed. So here's my question. I brought this up this morning. I did a very unusual show this morning, Brian.
Mhm.
In fact, people were saying, Randy, how out of character of you.
Mhm.
I took 9 items that were bothering me about
Mhm.
Tesla, and they're like, "Who is this guy? Who is this?
Mhm.
You're supposed to be Mr. Optimism."
Mhm.
So as a test, it didn't work out that well. Nobody watched it.
Mhm.
They
Mhm.
just want optimism from me, I think, Brian.
Okay.
Okay, so but I think my biggest question, the one that's I would think is the most important, if you were working, and this is, I'm completely out of my league here. Even after we're writing this book on AI, this is still something that I don't fully understand. If you're working on this new FSD 14.1 for months, months and months and months and months, and you're testing it, somebody's out road testing it, right?
Mm-hmm.
And they don't just do all this in the lab. They get a version, they go out and they road test it. You said the other day you thought it might take 2 months from start to finish to do a full-on training session. 2 months.
No, I don't think I said that. I think I was saying that in order to do a comprehensive release, like to the general public, then it would take a couple of months to have a lot of people, like the entire public, like hundreds of thousands,
Oh,
millions
you're
of
not
people.
talking about this. You're not talking about the training on the computer.
Right. Well, the training computer could take time, but I have no insight in how long that
Okay.
takes.
All right.
I'm just saying that because it's difficult to find all these edge cases that you need
Right.
to do this, what, 1,000 miles per person per month,
Yeah.
and then 2,000 miles. So you're looking at, 500,000,000 miles or something like that in order to try and get a bead on how good is this really good version that you have. They need to get a lot of the unusual cases in order to properly test it.
Okay. So here was me being grouchy. So I don't have it, but I'm watching all these other guys, and it seems like there's 3 things that people are complaining about. One is this braking, and some people are saying that they think it's because it's so good
Hmm.
that it's seeing things and maybe sometimes not seeing things, but it's causing it to break. It's seeing things ahead of the human. Human didn't even see it. Maybe there was something there, maybe there wasn't. Number 2 was not going the right speed limit in some school zones.
Hmm.
Number 3 was parking and handicap parking. So those don't seem like edge cases to me. See, does this sound like Randy now?
Yeah. Okay.
I want to fire that employee. It seems like those 3 would have been popping up in regular testing.
Hmm.
They seem like kind of weird problems to be coming out in a rollout where the early adopters are the ones finding out.
Hmm. Um, yeah, it's I guess takes more time to polish out all these problems. Like, why didn't they come up and require fixing when they just had a few hundred people versus getting 100 times more? Um, I think it's not always getting the same behaviors in different situations. So is my guess as to why. I don't think it's consistently causing those
Yeah, I see.
issues. So then you have to be able to get it reproducible enough or get a handle on enough so you can identify something to fix. Um, I think it just, yeah. So that's my guess as to what's happening.
Okay. All right. All right. So yeah. So overall, I thought it was a great week. The fundamentals are there. Everybody seems to be on board. Everybody's thinking good things about Tesla right now, it seems.
Mm-hmm.
And so let's look at the economy.
Mm-hmm.
So people have different opinions about what's happening with the economy, but I'm trying to manage my expectations, but at the same time, trying to analyze it. And so since I'm trying to do analysis, I've come to you. Okay.
Okay.
If the economy is slowing down and jobs are flat to down, oh, that's a poetry.
Yeah.
How can I finish it off? If jobs are flat to down, the economy's flat, then inflation theoretically wouldn't be an issue.
Okay. Sure.
I mean, the only thing I'm seeing right now that's inflationary is 5% year over year gains in pay.
Mm-hmm.
I'm not seeing it anywhere else. Certainly not in housing. Doesn't seem to be in goods, not in
Mm-hmm.
groceries.
Mm-hmm.
Much across the board, the only place we're seeing the inflationary, actual inflation, I mean, like over 3%. A
Mm-hmm.
lot of stuff under 2, but only place we're seeing over 3 is payroll. So if jobs are soft,
Mm-hmm.
theoretically payroll would start to come down a bit.
Mhm. Um, I have yeah, I don't have a good read on what's causing significant amount of inflation. Um, I don't think there's any major food category, although I'm seeing meat kind of go up a little bit.
But that's a specific circumstance.
Right.
Yeah,
Okay.
there's a shortage of beef on the hoof right now.
Okay. Okay.
There was a drought in Texas. They
Okay.
ended up not they didn't have enough grazing land, so
Okay.
they chopped back their herds, um,
Okay. Okay.
and now we're still suffering from that.
I see. I see. Okay. So yeah, in terms of like an overall trend in that, other than is all the AI spending somehow driving some inflation there? And is, you know, big numbers from that, some, even though it's in a small concentrated area
Mhm.
of the economy,
Mhm.
somehow triggering in this broader economic thing. But yeah, can't think of what's causing it. Like people are saying that the tariff stuff is causing stuff, but I don't see any of that personally.
So basically, Powell says that the tariffs are 0.3 to 0.4% so far.
Hmm.
So if I take his numbers,
Hmm.
the PCE,
Hmm.
whether I use the headline number or or use the core number, either way, we're looking at 2.9, 2.7.
Hmm.
So if Powell says that 0.4% of that is tariffs, and he agrees that's not inflationary,
Hmm.
then we'd be down to 2.5, 2.3.
Hmm.
And by the way, trueflation is at 2.2.
Hmm.
So it seems to me
Hmm.
anybody that's worrying about inflation out there is not, I can't figure out where the inflation is going to come from. I've tried. I've looked and looked.
Hmm. Yeah, it doesn't seem like some huge amount of stuff is spinning out of control. It
Right.
seems within a range because it's tough to tell at the 2-3% level, between 2 and 3, because if you have to get a basket of things, it'd be difficult to be able to personally determine, you know, where the inflation's at.
So then I look at it the other way and I say, okay, let's say that business is better than everybody thinks, which, if you look at the Atlanta Fed at 3.8 for the third quarter, if you look at some of the projections for next year, if you look at consumer spending is seemingly fine. If you look at those paychecks going up and inflation, even if it's 2.9, that would still be 2% real in terms of employees' paychecks getting bigger.
Mhm.
So if I look at all that, it seems like that would be potentially inflationary if consumers are spending a lot. But I don't hear anybody saying that that's going to be the problem. Oh, the consumers are going to catch fire. I haven't seen anybody, not one headline suggesting that that's the direction that we're headed.
Yeah, it doesn't feel like everything's wonderful and that, people are making a lot of money other than, like these very, very narrow areas.
Right.
Um, yeah, the overall economy doesn't feel um, um, frothy in any way.
Right. Okay. So then the Fed's going to drop rates. I mean,
Right.
we're almost 100% sure they're going to drop another quarter at this meeting, and the December meeting's looking stronger and stronger for another quarter. Now that mostly helps regional banks, durable goods like cars, refrigerators, etc. And if durable goods and that helps manufacturing, potentially it could help home builders because they need to borrow their money short term from the regional banks in order to build the houses. So
Mhm.
that's going to help their costs and allow them, make it easier for them to borrow. So then we only really have to get the mortgages down. If we get the mortgages down, which they're headed down, if we get the mortgages down in the fives, even if it's 5.9, then it seems like the parts of the economy that have been slow could do okay.
Mhm.
I'm not looking for them to go crazy, but
Mhm.
at least I think they could come back and be vibrant.
For me, it feels like things have been so suppressed for so long. Like I live in the San Francisco Bay Area. Seems like a lot of people that I know are out of work and that kind of thing,
Oh,
or have less work, or it's not feeling like there's abundant jobs, especially for people new coming in. It also hasn't been feeling like any part of the economy been good. It seemed like it was over suppressed with the high interest rates and that kind of stuff. So we only had one cut. So I feel none of the a flood of more activity has happened yet. I think more cuts need to happen, and then it starts getting back to normal. And I don't see how being normal for just a few months is somehow, and then inflation go terrible. Because it
right.
seems like it's been bad for like 2, 3 years to me.
Yeah, yeah, yeah. So yeah, so then I look at the whole AI thing, and there's
Mhm.
at least two impacts happening right now. You just mentioned massive amounts of building,
Mhm.
massive 40% of the GDP increase this year
Mhm.
was from build outs.
Yeah,
40%.
right.
So that's a major area where infrastructure, the actual chips,
Mhm.
copper wire, blah, 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 people that are in the building trades, they're all getting a boost from that. And it's another again, this is a category where they haven't been, they did okay because what do you call it? Biden had that infrastructure bill, but that thing
Mhm.
got used up.
Mhm.
And then it was a little softer out there for the construction side. So all of this infrastructure things going on should be helping that construction sector.
Right, but it's only in certain areas, Texas, Pennsylvania, North Dakota, Virginia, so it's not a US-wide thing. But in those areas, I presume it's a bit of a boom town type thing where you got like tens of thousands, 100,000 workers um, building the power, building the data centers, and doing that install. But it's only in these states that have low energy costs where they can afford to build these AI data centers. So it's I guess for the rest of the country, be kind of like looking at an oil boom or something like that, where it's
Right.
like it, yeah, concentrated.
Okay, so last thing, and this is, of course, a main thing that we talk about in the book. We've got a transition going to happen.
Mhm.
I don't know where you feel the transition is. I'm going to use Chair Powell again. Powell says he thinks we're at the tip of the spear. Now, you've got to have so one of the things the Fed does, I think probably does fairly well, but I don't know how good they are at analyzing the information. Is these guys, a lot of them are presidents of regional banks, and then others of them are just members of the Fed, governors.
Mhm.
But they go out and they talk, they really go out in the streets and talk to people. Now, maybe they're only talking to, highfalutin folks and not Main Street, but that's part of what they do is they actually go out and do surveys and talk to people, go to lunch. And so Powell's feeling from all what he's gathering in, and he was specifically quoted, I heard him say it. He says, on the AI productivity thing, we're at the tip of the spear. So
Mhm.
that would suggest he doesn't think it's having a massive impact yet, but that he believes it's going to. Okay.
Mhm.
You're in San Francisco. You are in that world.
Mhm.
You know people in that world. What do you think's happening with the productivity side? We've had also reports like, I guess, at MIT saying, well, it's not really working because these companies don't know what to do with it yet. Do you think the productivity thing is at the tip of the spear, or do you think we're further along, or do you think we haven't even really started yet?
I think it's getting more and more. I would say 2 years ago, it was, for the Bay Area, very early days. And then a year ago, if you went to an AI conference, and there were a lot of them, you ask, what people are doing, and everyone would be raising their hand about doing a lot of pilots, testing to see what they could do, what productivity they could get out of it. And then now, I think there's a lot more full-on implementations where real value is being obtained by enterprise companies. I think it's spreading out to um, to real working projects. So, um, and then I expect it would get better and better where major transformation happens next year, where you go from we put $10 million in, $50 million in, we're doing stuff, it's getting results, not just at the big companies, where OpenAI does something with ChatGPT and they're making $15 billion, you know, IBM's doing stuff. So I think it is ramping up. In terms of like tip of the spear, I guess it's comparing to like how much traction the overall economy. Like I think enterprise stuff, they're throwing on numbers like getting to like 100 billion in enterprise value there. So I think the returns are getting there and it's scaling up, but it's in terms of tip of a spear, it'd be like if you compare it to internet days and that kind of stuff, like eventually you went from what was happening in 2001, 2002 with websites and things, and then you got to major cloud computing and a bunch of SaaS stuff, right?
Right,
Where it got to trillions of dollars.
right.
So um, I think we have to get there, and I don't think we're fully there yet. I think there's still, room to run on that. That it will take time to get AI to replace fast things to get to the scale of the trillions of dollars of cloud computing. Um, so that also, for me, argues against the AI bubble situation. I
Yeah.
think we're getting to real value and major implementation, and it will take time to digest and change things. Like you can get a lot of results, but it will still take time for companies to make the transition to fully implement that kind of stuff. Even if
Sure.
they were to say, okay, I'm going to do something and then get rid of a bunch of people, or I'm going to put this other company out of business, all those things still take time.
So if we get productivity increases, then we get deflation,
Mhm.
or at least it has a deflationary impact. Doesn't mean we go under 2% or go under zero, but
Mhm.
it pulls down any inflationary pressure because you are making more product with less, more services with less,
Mhm.
which is the definition, of course, of productivity. All right, so all of that, when I add all that together, and
Mhm.
I listen to Tom Lee, and I listen to Dan Ives, and I listen to uh, Besant, and I listened to what's the other guy in the
Lutnick.
Trump's, yes, Slutnik. I listen to these guys who are really smart people who have been right a lot. What I'm hearing is 6 to 9 months. It's going to be crazy time.
Okay. Um, well, the thing is, for us people, look in the on the investment side, right?
Mhm.
That we had seen some, like I think the second quarter was when um, Meta and Google and IBM talked about, and talked about the increasing returns that they were getting like 15% more on their existing businesses, that kind of stuff. So getting those surges of increased growth on the revenue side seems to be, tip of the spear kind of thing. And then you could then apply it to, figuring out, like I can make more money, figure out how to make more money, and then figure out how to optimize and get things more efficient and that kind of stuff. So I think efficiency comes later after you can get presumably low-hanging fruit on improvements of revenue generation, that kind of thing. Um, because I think efficiency things take longer to do. Um, so anyway, so I think it in terms of 6 to 9 months getting really, really crazy. I think it depends upon things like, is the next wave of models, Grok 5, Gemini 3, do they deliver on those
Mhm.
things? I think they're going to get a lot more productive just by using the B200 chips. Like there was some recent new metric by SemiAnalysis where they said that they have some inference max analysis, where they looked at the AI factory and said, okay, if you have these 1,000 chips, for $4 million, you can get $100 million return. That returns should be happening because the chips are and the models are now so efficient at what they're doing.
Mhm.
So if those things are true, then we should see a wave of improved results and that kind of thing, which would come through in I think the leading tech companies that are doing these implementations would say, okay, yes, we're getting even more traction on enterprise AI revenues, more results, and they would be trumpeting that. So we would see, really good quarterly numbers from that and be saying, here's why it's happening. And they would be pointing at the AI to say it. Um, so if we see it, I think the quarterly earnings should be really, really great for those reasons.
Okay, so I'm bullish. No, really, Randy? Okay,
Mhm.
so um, let's talk about Tesla again a little bit. You and I said the other day 500,000 shipments in quarter four. When we said that the other day, we didn't know for sure that Berlin was going to get the Model YS, a standard. Surprisingly, it is $11,500 or 10,000 euros less expensive than the current pricing on the premium in Berlin, which is a lot less, bigger difference than the difference in the US. Um, you said, I think you already said that you thought this would be a bigger deal for Europe than it even will be for the US.
Right. Yeah, that's my expectation. They're more price sensitive, and having a bigger drop in price should be significant. I think they have far more sales. I think like 30% of Europe's sales are EV, and far more of them are in that lower price level. So this should be a big help.
And then Dan Ives said today that he thought that the Model YS would help us move over 600,000 in cars.
Mhm.
Didn't even say anything about Cybercab,
Mhm.
600,000 a quarter.
Mhm.
So that's quite a statement that
Mhm.
the Model YS might be responsible for 100,000 cars a quarter. Do you see the YS potentially being that much?
Um, yeah, if you have Europe and China having those numbers, it's a question of like how much can they push up the production? Like if the demand is there,
Mhm.
because if you make these more expensive vehicles, then can you make them and get to those numbers? Because basically, in order to hit those numbers, 600,000, you need to have 300,000, 320,000 in China.
Mhm.
You need to have 200,000 in the United States and 100,000 in Europe and other places. So we had 178,000 in Q3
Mhm.
in the United States. We had 242,000 in China. So you need to have that step up in production, which I think is there that they can um, get the lines and do that capacity to make it happen. Because I think they've had 93,000 as your best um, quarter or best month in China. So if you were to do 3 quarters like that, going all out, you have 208,000. So you have to get another 20,000 of efficiency,
Right.
which by my analysis that they should have done that in the lines to get more efficient, to get that production up. And then Berlin and Austin should be able to do it because they have just so much space. They could just they have the room to do another line. They can get all of the shifts going and
Mhm.
then build it.
Right.
And then so long as there wasn't some problem with the supply chain, then they should be able to get. It should not be a big stretch for them to get that 600,000.
So the other day I said that I thought that the first quarter would drop the normal, about 20%, which would be like 80,000. If we get to 50,000, I'm 500,000 rather, we might drop 20%. That might even get us down to 400,000. But I
Mm.
didn't take into consideration any cyber trucks. I'm sorry, Cybertruck, semi trucks. What are you thinking of, what would be your middle of the road estimate a first quarter ramp on semi trucks.
Um, I'd like to see about 5,000 for the quarter.
So
That'd be a good.
about 5,000, and we don't know what they're going to cost yet, but I think we'd be fairly confident that it's at least 5-1. So in other words, it'll be the equivalent in profit. Well, the profit maybe not the first quarter, but eventually but the total sales at least might be 5-1 in terms of the price per vehicle.
Yeah, 200,000 at least, you would think, and then could be even higher than that. So if you had 5,000 times 200,000, it would be
You said,
um,
well, if you have 5,000 times five, that's how I was looking at it. So it'd be 25, the equivalent of 25,000 cars.
right, 25,000 cars. Yeah, yeah, yeah.
So
I was going to the actual numbers
right.
of
So
like,
if we actually drop 100,000, we might get the equivalent of 25,000 of that back
mhm.
with the semi truck. Now the other thing is, I know I've said this on my show before, but I'll say it again. What I used to do in slow times in my company, I tried to come up with my new products during this time.
Mhm.
So what we've got right now is we've got Model Y long, Model Y standard, Model 3 standard, and performance. All of those introduced here in the beginning of the fourth quarter. That could carry over. That could help us in the first quarter as those ramp up, because the Model 3 S isn't coming out until December. And the two Model Y S's in Berlin and United States don't come out till November 1st or November sometime. So these could definitely be adding to the first quarter and making
Right.
up for some of that normal 20% reduction also. So that plus probably another bump in energy, we might not really have. In other words, first quarter might not turn out that badly. Oops, we lost your mic. What happened to your mic? Where did you go? No, it's not. We're trying to read your lips.
Okay.
Okay.
Okay. So yes, I think first quarter can be surprising.
Yep. Okay. All right. Okay. Last thing on the agenda is the earnings, estimated earnings for quarter three. The street is still somewhere around 50 cents, depends on who you ask. Some are lower. I think the highest I've seen is 59. And that doesn't mean the highest I've seen, but the highest average I've seen is 59. Troy just came out with his at 52, and that's a bump. He was at 47. So you and I think, already talked about this Wednesday. I'm at like 65 to 75. I don't see how Troy can only go from 37 cents in quarter two to 52 cents in quarter three when he already knows about the dramatic increase in energy and cars and trading days until Wednesday, the 22nd. We could definitely see some EPS increases, which also should be stimulative for the stock.
I don't expect that to actually move the stock that much. When we get those increases that because of the volume increases, I don't think that really moves the stock. I think the smart money would already have made their bets based upon the volume numbers. So, although when you do get the actual
Yeah.
deck, then the actual numbers then impact things. Yeah. So
Compared to the street estimates. Yeah.
street, yeah, yeah.
All right. Okay. So that was what I had on my mind today. Is there anything I left out?
I think
what I left out was your technology. There we go. You're in and out. You're in and out. Let's call it. Let's call it for now. All right.
Okay.
Brian, as always, thank you for coming on, and we will look forward to doing this again. And to all of you out there, it's been great. Well, it's been great for me talking to you, not so much him.